So essentially, we see critical raw materials being incredibly important for a range of things. Historically, the big focus was thinking about fueling the green transition. Now we're thinking about critical raw materials and their needs in defense equipment and also in AI-enabled technologies. If you look at the news and you think about tariff controls, we can really see that actually supply chains are really important. And our report really looks at the different ways we see both the European government and also the US looking at different ways to essentially help secure supply chains, given a lot of the concentration risk in China.
Great summary. Let me ask you another question. The Chinese have been at this for 20 years. Everything I read, they spotted this one. This ain't rocket science to know that in all these things we just mentioned, AI, defence, green transition, EVs, whatever it may all be, mobile telephony, we need these things. Why have the Western powers been so incredibly dumb and complacent not to realise that the Chinese were absolutely cleaning up on this one and we weren't even at the races?
Great question. It's a tricky one because these materials clearly are well needed and that's nothing new. I think the challenge is trying to understand which strategies are required because it's not a simple thing. Yes, we know we need cobalt. Yes, we know we need lithium. But I think governments have been working out what are the best strategies to approach this. And I think the most recent development, thinking about substitution risk, thinking about maybe increasing recycling, thinking about even looking at new generation materials, have really been the ways that the government have really been trying to step up and deal with this race to, I guess, acquire different critical raw materials.
You've highlighted how we have seen the US and also European countries actually trying to do more in this space, trying to catch up with China. I'm wondering whether there's actually a solid environment, business environment in Europe when it comes to actually companies being there to absorb some of the funds that the EU has announced in this space. What sort of companies have you, what's the picture like in terms of that offer from the company sector?
We see a lot of innovation happening, to be honest, and I think for many sort of projects which are sort of at the initial stage, what has been required has been sort of investments so that companies can start either exploring new sites, they can be trialing out different recycling technologies. We do see an investor and an investment appetite for these funds as well, and a bit of a sort of a sandbox to try different new technologies. And I think the sort of funds, I think about 20 billion has been offered to new companies to try and experiment with different ways to really deal with these supply chain issues, has been a good way to at least get the ball rolling in this space.
I'm just going to bring this up. I'm going to bring the three-letter word up. Ooh. ESG. Yeah. ESG. To what extent is that actually being factored in when you think about some of the dynamics here and the fact that we are ultimately not seeing much interest from the investment community at this stage when it comes to ESG?
I think you can see it in two ways. Firstly, on the ESG side, you may argue that many of these critical raw materials are required for the green transition and all of these environmental sort of issues. So then your first point,
the exploration of
precisely. But if we are sort of taking that to the next level from a demand perspective, actually a lot of the drivers for these critical raw materials are sort of agnostic to ESG on the AI side. And then to your point that you mentioned on exploration, I think it's really interesting to see. We see actually more focusing on permitting. In fact, if you look at many ESG investors, and we do a lot of research looking at sort of flows in thematic funds, looking at ESG credentials as well, we're seeing more holdings in mining names as ESG investors who are thinking about the transition as well are very much aware that if you are trying to power a greener economy as well, actually you need to be able to get access to these critical raw materials. So we're seeing the story starting to evolve.
Differentiating from rare earths that aren't rare and critical raw materials that are critical. I think that's fair to say. Rare aren't rare and critical are critical. Ergo, it goes in what it says on the tin as well. If there is a lot of more investment and players going into this as well, they're going to want a price at the end of it as well. If there is a lot more capital going in, are they going to get the returns? I mean, let's turn this into pure basic economics as well. Where do we sit on the price of the? I mean, obviously they're not homogenous; they're all different prices as well. But I mean, is there a danger that actually that it's not going to give its return on capital?
And I think that's the biggest problem we've had, particularly when you think about, say, the recycling of critical raw materials, where you saw a lot of capital being thrown into new recycling facilities, but actually the economics of many of these plants didn't work. If we look ahead and you look at some of the demand projections that we're seeing for, say, rare earth minerals, that does suggest a slightly more supportive economy when you're thinking a little bit about the economics of recycling these materials. That being said, I think we're no longer in an industry where you can sort of say that the green premium for, I don't know, recycled or reclaimed rare earth materials or critical minerals will be sufficient, and the economics need to make sense.
Katherine, no conversation is untouched by the tariff wars we're seeing at the moment. Are you seeing these, and there's a whole host of minerals here, and my eyesight is so bad that it's very small. Anyway, but are you seeing, I can see most of them, these names of these products coming up in tariff conversations a lot?
Absolutely. Copper would be a great example.
Copper's the
Yeah.
best
And
example.
it's very timely.
Do you want to come in on copper? I
Well,
mean, it's not, it's one that all our viewers, it's called Dr. Copper historically because it has a predictive effect potentially on what that's doing for the global economy. But in terms of what we've just heard on copper most recently, I can't see it ending well.
It's a great question. I think with copper, it's been in a really interesting position. If you look at the EU's most recent sort of critical raw materials study, they actually highlighted as copper as a sort of a key substitute for many of the most important critical raw materials. So when you think about these tariffs being imposed as well, we see a lot more of a focus on how you can essentially use copper in different situations. But tariffs, again, highlight our main argument that you actually need to get exposure to a wider range of different materials to think about substitution risk as well, and also think about your global sort of partnerships.